Yeah, hello guys. In this video, I'm going to explain because I got a message from someone in my comment section that I should explain what I mean by one of my video where I explain what external liquidity graph means. So in this video, that's what we're gonna explain here, and I'll show you the typical example on the chart. So when I say external liquidity, what I'm saying is when the market is giving you impulse and correction, first of all, as I explained, get to identify your IDM inducement, then allow the market to do what? To take out that inducement and close above here. That's when you have a structure. Then by doing that, this is going to be your low that must be protected. So if the market do something like this and push up, then it means that this is the recent pullback that the market does. But if it doesn't, it means that we are using this one. But let's, for this example, this is the recent pullback that the market actually created. So let's say market decided to do something like this and push up again. All you need to do is to shift this to this level and wait for market to take it out. So let's say you mark this level as your extreme POI that you're expecting to sell from, to buy from, sorry, and market do something like this and sweep this low. Sweep mean candle do not close below this level. It's a sweep. Maybe market come down and the candle close inside, depending on the time frame you're actually marking your structure from. So when you have a sweep like this in this place, when you have a sweep of the major structure, this is what it means by external liquidity sweep. This is not change of character. The change of character is only confirmed when the candle close below this level. That's when we confirm the change of character. But if that doesn't happen, it means it's external liquidity grab. And as you can see, it means that this is a liquidity here, these are liquidity. So it means that market wants all the liquidity, including this internal liquidity, and it also need the external liquidity. External liquidity. That's why in some cases you see that you will be attempting to buy here, and probably maybe you are not lucky, you put your stop loss very close and you target this level, and you will see that market sweep you out, and at the end of the market still go your way. It's still not your fault. It's external liquidity grab. There is no way you can escape that. It happens once in a while, so you just have to understand that, and don't really beat yourself because of that. Just count your loss and move on to the next setup. So even if you say, okay, you are putting your stop loss here and you are like this, market can still sweep you out. So it's not about where you put your stop loss. But me, I used to advise that you allow the market to breathe. You give the market a kind of space for any of these things to happen. So when you calculate it, for me, I target 1 to 3, for example. So I have no reason, if I know that the market is coming to this stop, I have no reason in using tight stop loss. I can easily give market room to breathe and make sure that it also occupy my 1 to 3. So in case if the sweep want to happen, if I'm lucky, it might not take me out, and if I'm not, then it's still part of the game. So that's what I mean by external liquidity sweep. So this change of character only confirmed after candle close below here. But if it's a sweep, then you can reposition for buy and markets will go to this break of structure. So let me show you the typical example. As you can see, market has been creating bullish momentum. You can see the higher high here, higher low here. The market did not close, so this high confirm after the candle close above. So it means that this level must be protected because no inducement. So this will serve as our recent pullback. This will serve as an inducement. And as you can see, market came back nicely and take out the inducement and do what? And push up. So this confirm break of structure. So now look at this. So if we are to mark our inducement, this is the last tiny pullback that the market did. So we can use this as our inducement, and you see market eventually sweep this low. So assuming that I'm preparing to buy from here, for example, and I put my stop loss here, and I see something like this, market swept me out, then I understand that this is external liquidity grab, then I can actually go to lower time frame and look for confirmation, and probably I'll re-enter this trade again. And if you don't want to re-enter, just understand the concept. It's not by force that you must re-enter the position, but in most cases that's what happens. So external liquidity grab, then the market will go. So the only thing that can confirm this change of character is after this sweep, market now closed below this candle, then it means that the market has closed below here, then we can now mark this level as change of character. So candle close is what we are actually uh, talking about here. So you can see this is a sweep, and if you see after the sweep, this low was still protected. So assuming that any other candle come below this level like this and close below here, then it means that we had change of character. But since this sweep, all these things are still inside this candle and it's still inside this sweep, this level is the, it means that all the liquidity here, has been grabbed, and market has the potential to go and grab the other liquidity above here. So that's what I'm trying to explain in that video. So if you find it understandable, kindly like, subscribe and share. And if you have any other question, just feel free to message me or to drop the comments. I'll respond to it. Bye for now.